let's face it. If you're an investor in the Philippines today, things don't feel right. The peso's at its weakest in history. The stock market's barely moved in over a decade. Inflation eats more and more of your income each year. And corruption, inefficiency, and uncertainty aren't just headlines. They're a way of life. You look around and ask, where is this all going? Because it feels like no matter how hard people work or how disciplined investors are, the system just isn't built to reward it. So here's the question that matters. Should investors in the Philippines be worried? Not just concerned, but truly worried, that maybe the rules of the game here are broken. And if that's true, what do you do? Do you hold dollars or euros instead of pesos? Do you store value in Bitcoin or gold? Do you start buying property outside the country instead of here? Do you move your money and maybe one day yourself somewhere more stable? Let's talk about it. The Philippine economy is not in crisis, but it's fragile. Growth looks good on paper, 5 or 6%, but that's just consumption. People spending borrowed money, not creating new wealth. Government debt has exploded, taxes keep rising, and yet public infrastructure, services, and governance haven't kept up. The peso has collapsed to near historic lows. And what's worse is that no one seems alarmed anymore. We've normalized weakness. We've normalized decline. A weak peso means imported goods are more expensive. Businesses pay more for supplies, and ordinary people quietly lose buying power every single month. The stock market, it's been dead money. If you invested in the PSEI in 2013, you're still roughly at the same level now. And once you factor in inflation, you're down. Imagine, 10 years of patience, risk, and discipline, rewarded with less than you started. So yes, investors should be worried. Because the problem isn't temporary, it's structural. The system doesn't incentivize capital formation, it punishes efficiency. And corruption bleeds productivity from every level of the economy. Now let's talk about the peso. It's not just weak, it's losing credibility. When the government prints more, borrows more, and spends more without fixing productivity, the currency always pays the price. So does it make sense to hold dollars or euros? Yes, and not just a small amount. Because foreign currency isn't about profit anymore. It's about survival. When you hold stronger currencies, you're buying stability. A rare thing when your home country's value is constantly eroding. But don't fall for the illusion that cash alone will save you. Inflation is global. The dollar may be strong today, but it still loses purchasing power over time. That's why real assets matter. And that brings us to gold and Bitcoin. Both are bets against the system. Gold is the old guard. Stable, timeless, uncorrupted. Bitcoin is the digital rebellion, borderless, transparent, and immune from government manipulation. If you keep your entire portfolio in pesos, you're not diversified. You're trapped. Holding 10, 15, maybe even 20% of your net worth in gold or Bitcoin is no longer extreme. It's common sense because if the peso continues to weaken and the government continues to borrow, those hard assets will protect you from the slow collapse of value. Now, let's talk property. Local real estate was once the pride of Filipino investors. Buy condo, rent it out, wait for appreciation. That used to work. But now, vacancies are rising, office spaces are half empty because of work from home, POGOs are gone, taking billions in rental demand with them. And soon, AI could start cutting into the BPO sector, the same industry that's been propping up office demand for 2 decades. You can't build property values on hope when the tenants are disappearing. Rental yields in Metro Manila are weak, 3 to 4% before costs. Meanwhile, inflation runs higher than that. You're losing real value even as you collect rent. Contrast that with buying abroad. A property in Greece, Dubai, or even certain US States could yield 5 to 7% net in stronger currencies with better protection of property rights and more predictable governments. You don't have to be a billionaire to do it. You just need to stop thinking small. Now, let's move to stocks. Yes, Philippine stocks are cheap, but sometimes they're cheap for a reason. If a market stays undervalued for more than a decade, it's not underrated, it's ignored. Foreign funds have been leaving, not coming in. Corporate profits grow slower than inflation. Governance issues persist, and the investor base is too small to drive meaningful growth. You can hold good local companies, but be realistic. A few great names won't save a broken system. The smarter play is to diversify globally. ETFs, international index funds, US and European blue chips, these aren't luxuries for rich investors anymore. They're lifeboats because the Philippine market might recover someday. But someday could take a decade or longer. The truth is this, you can't build lasting wealth by waiting for a government to get its act together. You build it by protecting your money from governments that don't. That's why the wealthy diversify. Not because they hate their country, but because they refuse to let its failures define their future. Then they earn in one currency, save in another, and invest in a third. They move capital where it's respected, not just where they were born. So should you be worried? Yes. Should you be scared? Honestly, maybe a little. Fear is what wakes people up. Fear is what breaks complacency. Because if you keep doing the same things, saving in pesos, investing only in local stocks, waiting for the recovery that never comes, you'll wake up 10 years from now in the exact same spot, only poorer in real terms. You owe it to yourself to think bigger. Move some of your wealth into assets that governments can't easily destroy. Hold currencies that don't crumble every election cycle. Invest in places where rules are predictable and progress actually means something. It's not unpatriotic to protect your money. It's unwise not to. The Philippine economy will have its moments. It will bounce, it will stumble, it will bounce again, but you don't have to ride that roller coaster with your entire life savings. Be smart enough to see what's happening. Be brave enough to act before everyone else does. This is Neil from Stock Smarts. Don't just survive uncertainty, outsmart it. Because the world is much bigger than one currency, one market, or one country. And if you want your money to grow, it's time to start thinking beyond the Philippines.